I see Lee has joined us. Let's see what time it is. Exactly 8 o'clock. So I think most everybody's here. I'm going to go ahead and kick this off. Happy Catter Day, everybody. Good morning where I'm at. It's nice, chilly, 40 and change degrees Fahrenheit here. It's beautiful and clear. And it's interesting, you know, Lee and JVC and I do the schedule a month or two in advance for the upcoming classes. And this is one we've done before. We've had a roundtable on this before. You know, the business, your trading business, thinking about your business of trading. And I'm going to elaborate on that in just a second. But I remember when we were talking about this one, you know, we hadn't done it in a while. And particularly with the copying and having multiple accounts and having evaluators and getting funded versus your own money, this becomes a really, really important set of decisions to make. And as we were chit-chatting about at the very beginning, the vast majority of traders really don't even have the tools to make those decisions, even if they understood the decisions that they have to make. So I was having this very conversation with one of my mentees, and we were trying to break it up into chunks, which is where the patterns of problem solving thing came from. So here's the 3 things we came up with for, and this is an individual. I don't want to go into more detail about this person. It's somebody I don't talk about a lot because they really don't want me to. And but they were at this phase where, you know, have a good edge, making money, you know, funded in a couple of places, but not a business person, you know, not somebody who'd ever managed their own affairs before. And so I've kind of been working on this with this individual for, it's over about 2 years sporadically. And so I got back in touch preparing for this class, and we talked a lot of what was working, what wasn't working. And I came up with 3 things from that conversation that I think are important. So let me kick this off with that. Today is a roundtable format, so everybody's going to be available to talk. We will open it up as the session goes, but I want to introduce what this is all about first. I think, and the kind of direction I want to take with the session to start, but feel free to go other directions yourself, is that there are really 2 distinct roles that you have as a trader. One of them obviously is to trade. That's the trader, the executor of your edge. And obviously, if you don't have an edge, then you have to start there. But once you have an edge, it's really exciting because you start making money, consistently. And then all of a sudden, there's all these decisions to make. Do I trade my own money? Do I get a funded account? Who do I get a funded account with? How do I trade it? What setups do it's a complex set of questions. It's like you need a whole general manager, which is what we call that, to consider all of it. The general manager's job, and anyone can be the general manager. For most traders, it's you, it's the trader, it's the same person. But if you're in a good relationship with a mentor or with a partner or with a husband or wife or brother or sister or father or mother, sometimes they make really good general managers. And here's why. And this is what I got out of my kind of debrief with my mentee. Here's 3 things that your general manager should do for you as a trader. And again, I'm defining a trader as the person who executes your edge consistently. And if you don't have a consistent edge, then that's the first thing you have to have, or nothing else makes sense. That's how you make money. And this is about making money. That's why we're here. We're not here to develop systems for 40 years forever. You want to get something working and start pulling money out of the market. So you first have your edge. Okay, then you have to manage that into a business, because pulling money out of the market requires thinking like a business person. That's the general manager. Your general manager's role should have 3 characteristics. Number 1, you should make general management decisions or converse with your general manager, if it's somebody else, outside of trading hours. Do not ever make decisions about opening up new evaluations or blowing evaluations up or changing your risk management strategy or new instruments or a new setup. Don't ever do that during the trading session, because I assure you, after years and years of doing this and seeing many, many other people make this mistake, you will not make good decisions in the heat of the battle. It's just human nature, okay? So that's number 1. Number 2, everything you do should have to pass. And this is a really simple, good way to put it. If you don't have a business background, if you have a business background, the whole idea of a general manager will make sense to you automatically. A general manager is a manager who is over all aspects of a business, hands-on. So they may also function as the president, but they literally are hands-on in accounting and human relations and hiring and operations. They do everything. They have to know the entire business. Think of, the general manager of a big retail store like a Home Depot or a Best Buy. There's hundreds of different functions going on in the store at the same time, and they have to be aware of and able to do all of them. It's a difficult job. Same thing in your trading world. So outside of trading hours, and then this is really, really important. Are your decisions passing a test of reasonableness? For example, we talked about one of these right at the beginning when we were chatting before. Are you thinking, I've got this new edge and, I just finally got it working. I'm doing swarming and it's been profitable for me. So now I'm going to open up a $250,000 account and I'm going to start making $20,000 a week. Does that pass a test of reasonableness? And again, how do you ask it? Would a reasonable person say, oh yeah, that's likely? And the answer is no. The right answer is somewhere between doing nothing and that. And so you're looking for a reasonable answer. What's a reasonable answer? Well, if I can consistently make $500 a day with a couple of micros or whatever, maybe the right thing is to find risk management that considers that kind of income and go do it for 6 months or a year, or at least 3 months. Don't think you can immediately take your idea and grow it. That doesn't pass the test of reasonableness. And it wouldn't in any business. You couldn't take a little bobcat, which is a tiny, not the animal, but there's a tiny little earth-moving device that's used in the United States. It's called a bobcat. It fits on the trailer. It's smaller than a car, and you can do bulldozer-like tasks with it. Okay, a bobcat is not going to be able to suddenly build a skyscraper all by itself. But that's the way people think. It wouldn't pass a test of reasonableness. Okay, and then the third one. And this is really about self-knowledge. The third one, and so it's emphasizing that to do this well, you have to be really self-aware. If you're not really self-aware, then it's probably important for you to find other people to help you do this, because they will tell you things about yourself that, since you're not self-aware, that you're not aware of. It almost makes, circular logic, but it's really important. And that one is, how would you manage you? If you were the trader, how would you manage you? Knowing, again, if you're self-aware, what do you do wrong and right? You guys hear me talk about my weaknesses all the time. I'm always early. And I used to try not to be early. And one of my mentors finally taught me, what? Rather than trying not to be early, which is good too, but maybe nibbling is something you should, kind of test your earliness. This was a guy who traded on the floor, and he told me he used to do that on the floor. When he felt like there was something coming and he really wanted to get involved, he'd be, I'm going to trade 100 lot. I'm going to go in with 1 lot and I'll just kind of nibble. That's what he did on the floor and got the sense of the trade. And it's just a way of acclimating your brain to what's going on right now, which is really, really important to do in that instance. So again, I could talk about this subject all by myself for the hour. That's not my intention. I wanted to kind of introduce it, kick it around, let JVC chime in, let Lee chime in, let any of you chime in, because it's a really good topic. So I just want to review real quick. Here's 3 things that I think are really important about your business. The general manager is not the trader, and you need to separate those 2 roles. There are other roles too. You need an accountant, but at the beginning, the general manager is the accountant. Then as your trading business grows, the general manager makes the decision to, guess what? Hire an accountant, because it gets more complicated when you get bigger and bigger as a trader. So those are simple examples of how your general manager has to function as you grow. And when you get a funded account, here's a really good example. You get funded at Lilu. Do you do an accelerator or do you do an investor? That is a general manager decision. You're trying to pull out quick cash. You're trying to grow the account fast. So that's the kind of decisions. You don't want to make them while you're trading. You want to make them while you're having a cup of coffee, staring at the ocean, or, listening to music or walking. So test of reasonableness. Are your ideas passing a test of reasonableness? Somebody else is often good at helping you make that question them. Can you convince somebody else you're right? Even if they don't know what you're talking about, you can still have the conversation. Here's my points. Do these make sense? Do these pass to a third party? Do these pass the test of reasonableness? Always outside of trading hours. And last, if you were managing what decisions would you make differently? Would you trade bigger? Would you trade smaller? Would you take less risk? Are you not disciplined enough? How would you explain to you what could you do better? I do that at the end of every day. I say to myself, what did I learn today? And if I was coaching myself, what would I do differently? And I'm just relentless about that. And that's how I kind of channel my perfection, because trying to be perfect in trading is really dangerous. But if you instead think of progress instead of perfection, just constantly improving every day, every week, it's about improving, and you'll improve the most when you make a mistake. And that's hard to get used to, but that's the way it works. So failure is the best way to improve. So anyway, that's kind of my introduction to the topic. I'm an excellent general manager for myself, as you could probably imagine, because I'm ruthlessly self-critical. And so I've learned, to forgive myself too. That's another part of this. Otherwise, I'll just feel so guilty for a week. I won't be able to do anything. So, there's a lot of parts to this. It's not a topic you can master in one conversation, but there's a lot of pieces we can talk about. So I'm going to go ahead then at that point. Are you and Lee offering these services? It's something a good coach can help you do, Jeffrey. That is actually an excellent question, if that's what you mean. But a coach really shouldn't be your GM. They can help you make GM decisions, like, what firm to go with, what account to trade, what, how much money, they can help, you can bounce things off them. That absolutely is a coach or mentor's role. But day in, day out, it would be expensive and kind of boring for both parties for that to be what they did. That you really need somebody who's more day in and day out, and keep your mentors more advisory. That's my opinion. That might be different. In fact, with that, I want to kick it over. JVC, Lee, would you like to chime in on what I said and add your 2 cents and perhaps answer this one? JVC, go for it.
Sure. I wanted to actually just add something to the test of reasonableness. Is note that it's test of reasonableness, not possibleness.
Oh yes, that's so true.
I think it's really easy because you could ask the question, well, is it reasonable that you're going to make $20,000 your first week in your new funded account? And right. Of course you could say, is that possible? Well, yeah, of course it's possible. Yes, absolutely. That isn't the question. Right. And beware of subconscious tendencies to want to skew your answer towards test of possibleness. It's really easy to do. It's a real human nature kind of thing to want to look at, like, no, but I could do that. That's totally possible. That could absolutely be done. Look how much money is sloshing around here. What
Moshe Rubinstein, the guy who wrote that book, would say to your point, and I'll kick it right back to you, but I just want to say this because he literally used to say this in class. He'd say the distance between the expectation and the reality is your pattern of problem solving.
Yeah. Okay. So, it's a trap, I would say, that you can really fall into, and it's so easy to. And I've done it. I mean, I can look back at things I've done and not handled well, and then of course in hindsight I'm looking at it and going, what was I thinking? Of course that was totally unreasonable that I was ever going to think that was the outcome, but it was technically possible. So I allowed myself to get trapped by that line of thinking. So, this is where there was an exercise that I did for a while. This was a while ago. This is in my early TRG days not super early, because I was far enough in that I was starting to recognize and grapple with this exact question of the two personalities. And it was probably around the time, in fact, of our very first roundtable or discussion on this, where we ever sort of mentioned it as being these two different people you have to be. And so I tried to figure out, like, well, how can I really make this like literally two different people? How can I do that when I am just one person? I don't have that second person that is going to be able to understand what I'm doing enough to give me the input. And actually, before I get into this, I will say this, that I do have an incredibly supportive partner, but she doesn't really know anything at all about trading. She knows a little tiny bit. I've explained just enough that she gets the basic idea, and she certainly understands supply and demand. She understands, the big picture of order flow and all of that. But she wouldn't really be able to give me detailed input on things in most cases. But I still have found immense value. Sometimes I just need to say it out loud to someone. And there have been times when I'm wrestling with a particular decision or issue or something I'm trying to figure out the solution to or whatever. And I will just go to her and just say, hey, I need to just dump something on you. I need to just talk. You're not going to probably understand it. Don't worry. It doesn't really matter. Although if something about it jumps out at you, by all means, I welcome your feedback. But just mostly, I just need a sounding board. So can I just vent or whatever? And she'll just sit there and sort of listen and nod and maybe have the occasional thought or on what I'm saying, but mostly probably it's kind of like, I have no freaking idea what you're talking about. But just that practice of trying to explain it to her suddenly unlocks things in my head. And by the time I'm done, I will more often than not, will have realized what I need to do, or I will have at least gained some kind of really valuable insight into it, even though I didn't actually get answers from her or feedback from her or whatever. So that's something to consider as well. You might not do that because you think, well, my boyfriend, girlfriend, friends, whoever, cousin, isn't going to know trading, so they're not going to be able to help me with it. But as long as they're not unsupportive, this isn't going to work with someone who's just like, what are you talking about? You're crazy. You're gambling. You're just go to the casino. It's not going to work. But as long as the person can just be silently just neutral, that alone can be really valuable. Anyway, so back to the thing that I did for a little while, which I stopped doing because, as you'll see, it's a little bit involved. But it showed me that there's something to this. And if I can figure out a more effective, efficient way to do something similar, I would probably try to keep it up. I would actually, at the end of the day, or whatever the end of my trading was, if I was done and if I totally screwed up and was $2,000 in the hole an hour in, and I'm just like, okay, that's it, I'm done for the day, I would do it then. If not, I would do it at the end of the trading day, market close. I would sit down in front of my computer and I would make sure that I was, dressed as trader. I'd go grab my baseball cap that I normally only wear when I go outside. I'd put that on, and I'd make sure I'm wearing like, a t-shirt or, whatever. I didn't want to just be in my jammies or, sitting around buck naked like I am often able to do in the warm California weather. But I would, dress as trader. There's what I imagine trader probably looks like. And then I would sit in front of my computer and I would turn on turn on photo booth, I think is what I used, the Mac app. But anyway, bottom line is webcam, and record myself. And I would just I'm talking to my general manager, and I would imagine that, okay, this is a part of my job, is one of my duties is at the end of the trading day or the end of my trading, whenever that is, I have to sit down and do a postmortem for a few minutes, nothing major, not an hour or whatever, just a few minute explanation of here's what happened today. Here's what I think I did wrong. Here's what I did well, whatever. Vent, whatever I feel like I need to do. And then once that was done, I'd stop the recording, and that was the end of that. The next morning, pre-market, I would come and sit down. So I've slept on it. I've kind of forgotten what I said. It's not immediately top of mind because it was, 12 hours ago or whatever. And I would sit down, and this time I'm dressed as general manager. So I would put on a nicer shirt or a sweater or, whatever, and no hat, and put on my glasses. And, I would literally dress the part of what I imagine. Okay, here's what general manager wears. Here's what general manager looks like. And I would sit down and I would do the same thing. I would record myself, but I was recording general manager watching traders video. And so I would sit there and I would watch traders recording from yesterday while I was recording myself watching the recording. And then I would pause the recording along the way, and I would talk to trader. I would give trader feedback. And I notice you're talking a lot like this. You're saying these things. Well, watch out for this, whatever. Or you said you did this, but did you notice what time of day it was? That really wasn't appropriate for that time of day, whatever. And I would just do exactly that. As I am not trader now, I'm general manager, and I'm hearing trader talking to me externally because it's on a video playing on my screen, and I would record that. And then
Was this the inspiration for the movie Inception?
Inception, exactly. But then it goes further, because then the end of the day, when trader needs to do their thing, whatever. Trader would first sit down and would watch general managers, or I'm sorry, no, it's been so long since I've done this, I got it wrong. Trader would watch that pre-open before he was actually going to start trading. And even though that wasn't that long ago, because I might have just done it as general manager half an hour or 45 minutes or an hour ago or whatever, I still would sit down and watch it as trader. And there's something about, even though I remember what I said, because it was only a half hour for an hour ago, whatever, I certainly remember it, but there's something about hearing it external to you, playing back from a video in your voice and watching you speak the words. There's something to that. And it was really fascinating. It was a weird exercise. It was a little trippy. It did feel a little split personality-y, but it was useful. It was very helpful. It's just that the process of making all those videos and changing clothes and all, it was too involved. It was too complicated, but it was an interesting test, an interesting exercise. And it showed me that there is definitely something to this. If I could figure out a way more efficient way of doing this, that was a whole lot simpler, that I could do with very little extra time and effort involved, I might consider doing this. Maybe do once a week kind of thing instead of every day, or something like that, which is sort of what I do in TRG now. I kind of use TRG as my end of the week. My GM, goes over my results for the week and kind of, does a relatively brief post on it. And I just use TRG for that. But anyway, this is just something, maybe try it sometime just to experience what I'm talking about. Cause it was a trip. It was really interesting to see Trader. Like, that's not me. I'm general manager, but there's Trader. He's talking to me. It was cool.
I love this. A couple of quick comments, and then a number of people wanted to comment as well. We'll open it up.
I see that.
Yeah, I've had this conversation with Video Game Guy, who is not a very, a guy that shares about anything much. I asked him when he first started working with his prop firm, and they were, this is before they were virtual, and now it's even more important. But I asked him if they had any sort of general manager, policies, because in a firm like that, everyone, a real prop firm, I'm not talking about an evaluator firm, he's literally a partner in a firm, and they split the profits of the firm, and then individuals have their own trading accounts as well. And so I asked him, if they had any kind of training or anything they did as a group for this. And he said, yeah, every week we have a call. And basically what you do is you just explain to everyone else, what went on your week and what you're doing. And I said, so would you call this a test of reasonableness in front of your partners? He said, absolutely. And we call each other out all the time. So I was doing this here and I got short because, and that's bullshit, and they scream at each other, and, now they do this virtually. And it's really effective because people that know you well will call you, and our friends or partners will call you out on your BS. So I can just picture this, JVC. I love hearing different costumes. That's great.
We need something where we can call each other out too.
Well, in a weekly schedule, I think feels about right. That would be actually really cool.
If there's a way to organize it, I'd be all for it, because I know other organizations that do that as well. For example, I used to train all the Microsoft resellers. So I was at a lot of Best Buy general manager and regional manager meetings. And the general managers in an area, like, in Denver, they would all get together, and the purpose was this. They would call each other on their bullshit, and it would be really fun. And guys would be laughing, and it really, really improved morale for everyone in what is a really difficult job. Being a GM of a store, you really are alone, like you are as a trader. Everybody works for you. You have to get everything right. You have to constantly. What's that?
I said, and everybody hates you.
Oh, yeah, exactly. They hate you. They talk behind your back. You have to motivate them. You have to pay them. You have to tell them when they're sick, they have to come to work anyway. That's the exact same thing you have to do for yourself as a trader. So anyway, I'm going to mute myself and toss. Lee, you haven't said much, but feel free to jump in. I know, David, you wanted to comment. Anyone else, just to remind everybody, you can all unmute and just have a nice conversation. So David, did you want to talk? You wanted to be unmuted for something?
I actually just have two specific questions, but I kind of want to hear what Lee has to say too. He's kind of just lurking in the shadows like a cat.
Well, so. I just wanted to add to one thing that JVC mentioned, which is the talking out loud, etc. It needs somebody who does have. He said, yeah, they've got to be supportive of trading, all this kind of thing. They need some base level understanding. If it's someone who is just focused on the money, and I think, David, you had that experience early in your trading career where I think your girlfriend or partner at the time said, "Well, you've made X amount, that's a nice handbag," or whatever, and was immediately looking at the dollar signs. And it's got to be somebody who
3 years ago,
appreciates that this is a job. And this is an income source. This is not a get rich quick. Otherwise, the feedback you get and the positioning of the advice, devil's advocacy, etc., that you're going to get is flawed because it's not coming from the same place.
Yeah, that's a really valid point for sure. If you don't have similarly aligned thoughts on money in particular, even if they are, quote unquote supportive, they could be supportive with completely the wrong thinking driving that support. So yeah, that's
just
really
even your own thinking of delusion and thinking you're gonna start out with your cash account and making more than what, $50, $100, and expecting $1,000 or $2,000. That's what trips up a lot of people when they first start. And I haven't even started that, but that's stuff that's in the back of my head.
I still find it's been a little while now, but the last handful of times I've traded my cash account, I still find that stuff creeping in, and I don't have that when I'm trading evals. And it's so strange because it's like, what is actually the difference here? Like there
You think it'll be
any,
a rude awakening?
I can comment on that one because I've been around for since the dinosaurs. That goes away when your cash account is truly enough to fund the amount of trading you're doing.
Good point. Yeah.
That's and without being rude, that means most people here don't qualify yet. When
sure.
And so that's funny because that's a really good way to measure risk. If you can just execute your process, and whether any given trade is a winner or loser doesn't matter to you, then you probably have enough capital in your account. Yeah. So anyway.
Yeah. Can I ask a question real quick?
Oh, absolutely. Please. It's a round table. Anyone.
Yeah.
Go for it.
I just started this cognitive journal probably about 2 weeks ago, and so it starts with it's like a 3-column table, and the first column is situations, the second one is self-talk, and then the third one is consequences.
Okay.
So whatever the situation is, I talk about it. What was I telling myself in the self-talk, and then the consequence of that bad situation, right? And
that's excellent.
Yeah, and I stole that from a book, but it's a good idea. And really what was interesting was, and this has to go with the trading business and the general manager, and I didn't realize it till you guys were talking about it, but I found myself adding to the self-talk column a general manager piece where it's asking, basically, I asked myself when I did a process violation and I scalped when I shouldn't have, and it was still a good trade and good execution, but I said I wasn't going to do it. I thought of myself as the owner of an account, and then I'm having someone trade my account. And, I have unlimited money, whatever, it doesn't matter, but I still hit him upside the head with a newspaper. I'm like, what the hell?
Yeah.
Why did you
what
do
were
that?
You thinking?
That's not what was in your process. That's not what you sent me at the beginning of the week that you were going to do. Do you want to go on the demo? And immediately that just clicked to me like, oh, okay. So now I see the relationship between the general manager and the trader, because there's a hard line like that general manager, you submitted, I'm going to follow this process. And then the trader executes on that. And then the general manager checks every day, every trade, every decision, that trader. And maybe that's a little too deep in the moment, but this cognitive journal really brought up that fact. And it's just really interesting for the trading business, because is this the process of thinking that you do when you start to manage let's just say
I have to jump in here real quickly because it's something you said at the beginning of this question, and I see part of where this is coming from. And again, just forgive me because I'm an old fart comment, but it's profound to me. So, what you said was, I said, "Oh, that's really cool." When you said those 3 points, and you said, "Yeah, I stole it from a book," and I'm like, David, that's why you read books. That is to get stuff from them. And I realize, a lot of this, you're relatively young, you're in your mid-20s, right? And so the whole process of learning and how to accumulate process is new to you. And I love it because you're on that path and you have to just embrace that that's how it works. Does that make sense to you at all? And I really would like to hear some other people's comments on this because, there's some really good comments in the chat too about losing trades. That's a whole nother conversation to go into. But back to what you were saying, allow me to use myself as an example, because when I was young, I was one of these, and forgive me, this is going to sound a little conceited, but it has to make the point. I was like one of these prodigal childs, right? I skipped grades. I got through school easily. I got to a good college, right? And so for me, the learning was automatic. I had been kind of groomed to learn stuff. So by the time, before I was your age, at my early 20s, I thought I knew everything already. It was like I was the most conceited asshole in the world. And I thought that, anytime anybody did something that wasn't what I thought, it was like, okay, they're wrong. And so overcoming that was a big challenge. But what helped me overcome it is exactly where you are now, when I started realizing that that actively learning is the only way to change anything. Do you understand what I mean about that, David?
Actively learning is really the only way to progress and move forward, because if you don't
actively learning is an effort. You don't just learn because you happen to be in the room.
No, you have to experience it, fail,
exactly.
And try again.
And that's where the whole notion I developed for myself, which was the idea of progress, not perfection, because I thought it was I already knew everything, so it was perfect. And then I realized, no, I don't know everything. Oh, now I'm an idiot because I've been telling everyone I know everything. So I got to step back and just say, you know what? There is no knowing everything. It's always about just wherever you are right this moment, and how can you improve from where you are right here, right now.
So,
does that make sense?
Yeah, it does. And I want to ask my last question, and someone else can hop on. But
sure.
Nothing specific to this question, just very general. And obviously, we've gone over it before, but I want to put it for the Zoom meeting. But what's everything you need to start your trading business? Obviously, you need the practice, you need the platform, you need the data feed, you need
computer.
To have an account, you need to have an edge. But like the in betweens, I mean, what else would complement that?
What do you mean? For example?
Okay, so you pass an evaluation, right?
Okay.
And you have the choice to continue on that, or you say, all right, this is good enough for me. I'm going to go find a $20,000 account. What next?
Oh, I see. Okay. Well, I've talked about this, in my opinion, a lot. And my view on this is that every evaluation you pass or every account you open, you have to have a specific business plan for that event. Like right now, I have a Boolenex that's funded and it's profitable. And I didn't realize they had the rule where you couldn't have two master accounts at the same time until one was over a threshold, and I'm not quite there. And so that kind of ruined the plan I had for the second one, which was to copy the first one. And, I could have just slow played it more. I funded it in 11 days. And so my business plan was missing there. And because of that, I made a mistake, a simple one. But I might have ended up using that evaluation for nothing or whatever. Maybe they'll do something. We'll see. And a lot of times when we have sales, you see these big sales, and you can buy from Lilu or Apex or whoever, $18 in evaluation, and you buy 10 of them. Most of the time when I do that kind of thing, I'm not intending to fund them all, but they're not just for silliness either. I try to have each one have a mission. And then it becomes a business decision. What do they charge monthly, or is it one time like Boolenex? And how far into the process do I have to go? How many months will it take to start pulling money back out? How much can I pull out? This is why I thought Maria did such an excellent job with the accelerator at Lilu. That's a really good example of, you could turn an $18 eval into $2,000 in 2 months. And it's really hard to do, but you can do it. So I think the answer to your question is you have to have a plan for everything you do. And sometimes as a new trader, that's very hard to do without getting feedback from other people. What do you guys think, JVC, Lee, other folks? Yes, Maria.
If anybody wants to unmute, you are totally open and
Thank
free
you,
to
Jeff. But yeah.
Yeah, I think you've got to have a reason for why you're opening accounts, and I guess that embarking on quote, another evaluation is possibly a reason, although I can also see, evaluations can all get pulled into a bucket of the evaluation accounts, to be traded in the same way. It's incremental drawdown. So I personally would regard, taking another $2 evaluation is just, okay, I'm going to buy some leverage drawdown. I don't tend to do different things in different evaluation accounts. But if it's a question of set up some account at a brokerage or whatever, that is for a specific reason. Yeah.
So then with a cash account,
if to the question of a cash account, I've gotten this one a number of times in the last few months, and I'm going to put this out there and say, change my mind, that kind of meme. If you're a new trader, and by a new trader, I mean you've got less than 5 years of consistently profitable experience, not 5 years of trading. I don't see a good reason to be trading your own money right now with all of the deals, and all you have to, you can get 12 grand out of them without a split, and then 80-20, and then 90-10. I mean, why wouldn't you trade somebody else's money? I'm going to put it that way. That's my position on it. Change my mind. It's quiet.
Because they might not pay you out.
That is your risk, right? And that's why, for example, what Maria did was the absolute right answer. If you can do an accelerator and convert, an eval at whatever price you paid into $2 grand, and then withdraw it and close the accelerator, great, that's perfect. Or you withdraw half of it and keep the accelerator. There's a couple different ways you can play that, but the other ones, yeah, you're investing for 4 months. And that's one of the reasons I realized, with the Bullinex thing, I was I bought a couple of them with the idea of doing a copy. And at first, there was conversation, they don't allow copying. Yes, they do allow copying, and the whole multiple master accounts thing is kind of in their fine print. Their help is not well organized. And so, we'll see if they make an exception. If not, can I put it in my back pocket and keep it till the other account gets to the drawdown? I don't know, but it's important to know all the facts. And I totally agree with what Lee said. I don't think we're going to see it in between now and the end of the year, but I think sometime in the first half of next year, we'll probably see at least one of these evaluators blow up spectacularly and not pay people. And they'll blame rules. They'll say that rules were broken and yada, yada, yada. So.
Bauer's got a good
Let's see.
question.
Yeah, I'm just reading through the questions. And by the way, if you do have cash, for example, I've talked to Surfer Guy is a really good example. I've talked to him about evaluators and told him, what they are just in conversation. And he's like, well, I don't need that. And I'm like, no, you don't. For him, opening his trading account, he put $100,000 in it to trade a 10 lot, full margin, or just about 10 lot, minis. And he could lose the entire $100,000 and his life would not change in the slightest. That's the right way to manage risk. So, if he puts on a 10 lot and screws up and has a really bad day, it might cost him 10% of his capital, and he's prepared for that, So that's the perfect way to manage a cash account. But if you're the guy that's saying, okay, I got my $2,000 and I'm going to put it in my cash account and I'm going to trade micros, you're always going to have that, yeah, but it's real money. And there's a slight amount of detachment you get out of trading somebody else's money one way or another that can make it a lot easier to stick to your process. That's my experience anyway. So let's see. I have 3 funded accounts with each of them attached to a specific setup. I think that's genius, Bar. See, I do it that way. Lee said, he trades them all the same way. I don't, because I trade a number of different styles. So for example, in the Bullinexes, which are 50Ks, all I'm doing is I have what I call a 50K risk management model. It's a certain amount of micros and MNQ in the middle of the day or in the middle of the overnight only. I never trade the open and I never trade the close on that account. In my other accounts, the bigger ones, the 150Ks, which are Lelus, I have my 150K strategy. That's where I swarm aggressively. And I'll do it any time of the day or night in that account. And so they end up, having very different P&Ls over time, but they're both consistently profitable. And I don't cross them, because if I use the 150K risk management approach and swarmed that aggressively in the bull indexes, I'd blow them up. I know, because I've tried. Swarming really takes the 150K size, in my case, 5,000 drawdown, to really make it work if you're trying to scale it. If you really want to get aggressive, because, by definition, you're tending to fade edges of things, and that requires taking some heat. So let's see, I'm reading some trading is risky, evaluators not paying. Absolutely, Robert, that's a great way to put it, and that's exactly how I'm doing it right now. I have my own money. I can afford to trade my own money. I'm doing it, but it's the second thing that I do. Most of the time, I trade the funded accounts money. And then if I've hit everything I want to do and I'm having a good day, then I'll flip to my other accounts and I'll trade my cash accounts. But sometimes I copy to my cash accounts. But right now, until there's a spectacular blow up, it's like there's all this low hanging fruit at the evaluators to pick. And I'm trying to see how high I can push it with 5 or 10 micros. How is it possible to do routine $5,000 or $10,000 days? I think it is. But it takes a ton of discipline that I don't have yet for trading that scale, that aggressively counter trend. And so, this is such a fun subject if you're a math geek like me, statistics geek, or if you're a trading geek, to just kind of build an idea and then go out and test it. That's what evaluators are perfect for, because there's skin in the game. And in a cash account, sometimes your emotions can really take you down a dark path before you stop it and get back to sanity. I routinely go insane in my cash accounts still to this day after 50 years of trading, and you just learn to accept that that's kind of being human, and you have to put circuit breakers in place, and it'll never completely go away, because that's just the way we are. We're not logical creatures. That's all there is to it. Let's see, that's an interesting point. Yes, it could, but they would see it coming, Jeffrey, to your point about blowing up an evaluator. So I'm going backwards here. So maybe there should be a session about what's the difference between accelerator count, Lilu. There is actually, there's a whole, Alfredo, there's actually a whole class on that. The Tickmaker courses and the hacking evaluators, that's exactly what they are. They're not totally up to date, but the conversation keeps them pretty up to date. The payout limits are tiny. Isn't that the argument for a cash account? What do you mean the payout limits? At Lilu,
if you have evaluators, I think.
If you have 150,000 quote unquote account at Lilu, that's the quote unquote limit. That's a pretty big chunk of money. And look at it from their point of view. If you could actually trade up past that limit, they wouldn't tell you, no, we're not going to pay you. They would just copy you if you were that good, because they would benefit from it.
Yeah, Sebastian, how much a month can you withdraw for the first 2 to 3 months? In the case of Lilu, I think. You do get to a point where it's uncapped.
Yeah, it becomes uncapped, and you just have to stay above the threshold. So basically, you just have a security floor in your trailing drawdown, which stops trailing.
But the way to look at this in a business-like way is the evaluation points for evaluators are what's the cost to get funded, time to get funded, costs to your first withdrawal, time to your first withdrawal, and nobody wins on all four, funnily enough. Why would they?
And what you said earlier, Lee, is absolutely right. What you're doing is you're basically paying for drawdown. You're buying drawdown.
Leverage drawdown. Yeah.
Yeah. And that's a lot of freedom. If I know, hey, I've got $5,000 worth of drawdown and it's costing me $94 a month at Lilu. That's really cool. If anything else comes up, I'll worry about it then, is kind of the way I look at it. But, I love the way Robert put it. It's a business decision, every piece of it, and you just kind of put them all together.
Imagine you could pay to rent a cash account with $5,000 in it that had the same types of restrictions around what you were allowed to withdraw, et cetera, but it was an actual real cash account that cost you $100 a month.
Yeah.
Would you do that?
Yeah.
I think probably a lot of people would. Absolutely.
It makes a good business decision. And then you say, well, why did the evaluators do it? Let's look at their side of it. It's a good business for them too, because the vast majority of evaluations fail. And the ones that don't fail, that get qualified, never get to funding. in the vast majority. And the few that do get to funding and can withdraw, which is even farther than funding, right? When those guys get there, they've had 3 or 4 months, or at least, in the case of an accelerator, 2 months to watch you. And if you're good, they have found an asset. They're going to want to keep you happy because you make the money. You're a trader that's profitable. And you're in the 1%, 2%, 3% that got that far. So their business is selling the dream. It's not paying people. They have an incentive to pay the people that succeed, because some of the firms, for example, Boolenex does this. If you've gone through their eval and you're quote unquote funded a master account, and you've traded the master account to the point where they do the 90-10 with you, they will try to switch it to a real funded relationship with a prop firm, because it benefits everybody to do that at that point. That might be a year out, but they talk about that in their FAQ as well.
So we are 15 minutes from the top of the hour. I want to kind of steer this a little bit back to the original topic.
Yes.
Especially there was a comment that Jeff Fielding made quite some time back in the chat now, but he was addressing it to me, asking, am I nominating myself as a TRG floor manager? I know that was said, I'm sure, somewhat in jest, but honestly, I that is something that actually interests me and appeals to me, and it's an idea I've kind of been kicking around in my head for quite some time. Of is there a way that I could somehow sort of act as not the general manager, because as Jeff pointed out, it's like we all have to be our own general manager.
Accountability partners, is that
exactly
kind of
that's kind of what I was thinking, is like some way in a structured format within TRG, where we weekly seems like it's probably a reasonable schedule, get together and we do this that we're talking about here and have some accountability and get some feedback and kick things around, whatever. The trick the preemptive problem I'm seeing with the idea is that people can talk, and it can go, it could be a 4-hour meeting if we got, 10 people who want to do it or whatever. If we were to do something like this, and I'm throwing this out there because I'm open to it. I'm interested in this. So let's kick it around in the pit. And maybe in the community share, we can start a thread discussing maybe how to do this for everyone's benefit. But what is in my head on something like this, it would need to be absolutely, mics on. I even would think it'd be really cool if we went the extra step and said webcams. So we're literally just sitting around a room, looking at each other, talking to each other, really make it personal, because so many people, I think, even within TRG, are afraid to kind of put themselves out there. And there's a lot of getting anybody to unmute even and speak. There's only a handful of people in TRG who have ever done it, compared to the number of people who have flowed through. It's something that people are shy and afraid to do. But I feel like that's critical. And anyway, but everybody would have a time. It'd be like, I would literally put a timer up on the screen share and be like, okay, here's your 5 minutes or 10 minutes or whatever we decided it was, countdown, go. And you say what you need to say, and then we'll dive into that. And then we go to the next person. It would need to be very structured and organized, and need to just keep on moving, lest it turn into a very, very overly long thing that takes way too much of everyone's time and gets off into the weeds.
A lot of this depends on whether it's psych and, dare I say it, navel gazing, or
yes,
is it risk management? Because you look at a prop firm, there is not lots of soft, touchy feely.
Yeah, there's none.
It's not
they
that.
may well engage, coaches, performance coaches, this kind of thing. But the policeman is the risk manager, and it's very simple. Daily loss limit, you stop trading. Yeah.
Mm-hmm.
Weekly loss limit, you go home for the week. Keep breaching it, you're out.
Yep.
And whether that's majority funds that you've brought or you're trading the firm's money, doesn't matter.
Yep.
So it's another layer of risk desk. That's what enforces performance.
Agreed. And since we're not a prop firm, everybody's doing their own thing. We can't actually have a real risk manager looking over our shoulder and and catching us doing stupid things intraday, whatever. So it would need to be clearly defined what this is, what it's not. And I definitely feel strongly that this is not a I need a pat on the back to feel better about what I did or whatever. It would be bring specific problems, specific issues, things, whatever, and spill them honestly and openly, and then look for feedback on them, and then move on.
I have a suggested format that might work for that, just to kick it out there and maybe try to improve it. Mm-hmm. What if, whenever I've been involved with a startup, we always used to have stand-up status meetings with no chairs. Yeah. So, and there were 3 items everybody had to discuss. Here's what happened last week, good, bad, and the ugly last week. Mm-hmm. Here's what's going to happen next week differently, if anything. And here's what I need help with. And that, and that was it. And then you sat down. You couldn't sit down because there was no chairs. So it went very quickly, 10 minutes, boom, 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 boom. And maybe something like that.
That's the kind of thing I'm imagining. Yeah.
The way I see this being feasible is, and it ends up being a service offering needs looking at, it is possible to have a private journalistic server. And
that's interesting. Yeah, he invented it for prop firms to have their own private servers. Yeah.
So that is how I see it working. Otherwise, if people can selectively go, well, I want to talk about what I did on this particular account or what have you,
you're
themselves.
Right. You're
Good
right.
point.
So it's got to be, I am wanting to be transparent on my activity. Yeah. Here's the metrics, and it can all be discussed in the in the framework of these metrics, which represents everything.
Otherwise, right. You can't hide from.
Yeah, and that's a commitment from both whoever's going to put that together and everyone attending it to actually make it work.
Yeah.
There's a cost to a journalistic server. Everyone's then got to be trading on Rhythmic, but that makes sense because a lot of this will be evaluated stuff. You've got to have some easy data collection thing in the middle for there to be a sensible conversation. Otherwise, it becomes a psych rabbit hole.
Yeah.
That's a really good point.
I do agree with that completely too. But another way to potentially do this, besides that's kind of a very formal way, and I like that idea, and I don't disagree at all. Another approach might be, and I'm thinking just in terms of things that I've seen work successfully in startups where there's a lot of decentralized people. In other words, people that are running their own businesses, but they have some sort of connection to each other. And I keep coming back to the idea of, I don't want to call it a support group, but I like the idea of an accountability group that you have something, not like you don't talk about your P&L and, it's almost like what we do on the hedge fund call. It's a sharing of well, when we first started doing the hedge fund call, we used to joke about it, and it was like sharing our hopes and dreams and experience. Literally, that's kind of what it is, just regularly, and it's kind of evolved into a little round table. And I think the beauty of that is something that what JVC was looking for here, initially. The beauty of that is it's real easy to call each other on bullshit and to, for example, when I was talking about swarming with the hedge fund guys, and we got in this conversation of aggression pushing the market into passive trading, and I was like, which are you guys? And they're like, both. And that's so obvious. And I think having a few different perspectives that are all comfortable is important like that, but I don't know how you get there easily. That's the part I'm struggling with.
Cool. Well, this is something that we can discuss in the pit. So if anybody wants to continue this discussion, likes the idea.
Real quick question for you about this idea, JVC. Is there any element of this that might be complementary with the dojo? It feels like there might, but I'm not sure.
I'm sure there's some overlap for sure. It might be something that becomes maybe some kind of outgrowth of the dojo.
Maybe
I don't
another...
know. I think I want to see if this gets legs in the pit.
Yeah,
quite frankly,
that's a good idea.
It's easy for us to just, wouldn't it be cool if? but then
Right.
nothing happens. So I put
Yeah.
this out to all of you who are on this call, and those of you who maybe hear the recording later. If this is something that appeals to you, that you really see value in the idea and want to help us turn it into something that would actually make sense and be constructive, because I don't think any of us want something that's just, you know, a time waster hanging out,
Just
talking
another
with
thing
a bunch
to
of
do.
other
No,
traders.
no, we don't want that.
This needs to be really, truly productive, constructive, and beneficial. So if we can find a way to do that, I'm definitely interested. So throw it in the pit. Somebody, you know, go. I literally want to see someone else start this. I want you guys to take the ball and run with this. So in community share, throw a topic in there and let's discuss and let's see where this goes.
I don't want to type this, but I'll throw an idea out to start to kick it off.
Mhm.
One way that I could envision this happening, to Lee's idea, you know, what is the cost of something like a private journalistic server? I mean, I know one way to do it, but you know, what would that cost everybody? What we could do is find out what the cost is, put a slight premium on that. Everybody contributes that, and the premium becomes a prize pool for following process, and it pays for the service for everybody. That's an idea. Just throw it out there.
All right. Well, we've got some ideas to start this, so let's see if this can get any legs. And if it does, we'll run with it. So,
Cool.
All right. Well, let's see. I know Lee had a hard out in 3.5 minutes now, so
Well, he
I
can
wanna be
go if he needs
respectful of
to.
that.
Yeah, I do too.
Um,
But if anyone else would like to talk, we can go a little longer. You know, if Lee has to go, he could go. That's fine.
So
Yeah,
if anyone
will
else
use,
is,
I will use that as the opportunity to jump. So I like the idea of this as a potential, you know, an extra TRG offering. I like that. But of course, it has to be driven by demand and engagement. So let's see
Right.
where that goes. Yeah.
cool.
Cool.
All right. Catch you later, Lee. So
I
I'm
would
going
like to.
back.
I'd like to say one thing though
Oh,
to the
go
to
for
the
it.
meeting thing. If we
Yeah.
were to do that, it would be best either Saturday or Sunday. Sunday,
Yeah, it would be a
especially, 'cause
weekend,
that's when I-
for
Yeah,
sure.
yeah,
That's when I
absolutely. A
go
weekend
set
thing. That's the
and-
time to do that when you're not sitting and the market's not open.
Exactly.
Yeah.
Yep.
Yeah.
I'm thinking
And especially
Saturday
since
personally.
yeah, everyone probably works during the week or 2 jobs in this or whatever. But
Yep.
yeah.
Yep. Cool. So Maria had said something here. You had 6 PAs with Lilu. You were tending to trade or copied them 2 at a time just for account preservation. You were the most cautious and patient with the accelerators, and
Yep.
those trades ended up being the most rewarding in profits. Cashed out and
Yep.
closed them both. Awesome.
Yeah, I've had similar experience, Maria, with my 25s and 50s, and that's why now I'm only doing 150s. And I'm going to the next level of scaling. I'm trying to see how aggressive I can get. And you know, I've had a couple of days where I hit my drawdown, and you know, that happens. Even no matter how good you are, going to the, and we've talked about this before. It's a whole nother topic, but going to the next level, you know, is always starting over, because you have to retrain yourself, even if you're trading the same setup. So
Mhm.
anyway, yeah, I remember that was your business plan. It was a good one. And, you know, the other thing is conditions in the market change. You know, if the
Yeah.
market had been really quiet and range bound, it would have been really easy to keep a whole bunch of accounts active and not blow them up. But then we got this sudden spike of volatility, and that's how it works.
Yep.
All
And
right.
you just mentioned something that is absolutely true, and I've encountered a number of times, is when you cross any sort of goal, a threshold, whatever in this world, and an easy one that I'm sure all of us can relate to, whether we've actually done it or not, is passing an eval, right? Just the first time you pass one,
Right,
and you know,
right.
maybe some of you have never managed to pass one, maybe you passed them over and over, and never gotten to withdrawal, whatever. You know, it wasn't that long ago when I still had never passed an eval. And I remember the first time I passed one, and, you know, didn't consider at all that anything was going to be any different starting in the funded, you know, and of course everything was totally different, and process went out the window, and you know, that funded, I'm not even sure that first one lasted a day. I don't really actually remember. It might have lasted a couple of days, but it wasn't long. It was less than a week for sure. And you know, then the next time, you know, passing was a little bit easier. It wasn't a breeze, but it was a little easier, because now I had seen, oh, holy crap, I can actually do this. All right, cool. And then the next funded, it lasted a little bit longer. I think it may have lasted 4 days a week. week,
Right.
something like that. And then it died. And then the next one, similar kind of thing. I passed it a little bit easier. Now passing them is, fairly straightforward as long as I just don't get stupid. As long as I avoid that, I'm okay. But I'm still not at the point of withdrawal yet, because again, I keep not acknowledging nearly enough just how much my mentality is going to change, because you don't think it's gonna. It's so
Right.
seems so silly. Like, why would it? It's not even real money. Yeah, it's just like, come on.
I'm
But
not
it
that
is
stupid.
yeah, it's such an easy thing to fall into, is to not acknowledging that, okay, I am in a new funded account now. Or I've just passed my eval, or, I'm in my 6th funded account and I've got a whole bunch of them. And now I'm going to start copying. I'm going to go to that next level, whatever it is. Anytime you're going to expand into a new level, you really are starting over, and it's worth acknowledging that, taking a step back and, putting on the general manager hat, so to speak, and just have a talk with your trader and just say, look, okay, this is a new thing. So acknowledge that and understand that it's a new thing, and don't let things like process go out the window, and know what you're doing.
I have a perfect link for that. I'm scrolling real quickly to find it. Remember that thing I shared that you shared the YouTube of, but I had it as an Instagram.
Success is not linear, I think, or something like that.
That performance artist did the stairway.
Yes.
And you should be able to see this. Yeah, just this is such a great piece of performance art, and it's exactly how trading works.
Yeah.
Passing and failing evals and scaling and working on a new setup. This is also life. For those of us that are older, this is life. But isn't that cool, you guys?
And this guy, speaking of older, this guy doesn't exactly look like a super spring chicken. This is impressive.
He looks like he's probably close to my age.
Yeah.
I would, that would be difficult for me to do. And I'm fit too, so. Yeah. And
this part blew my mind.
Yeah, it's so good. Yeah. I mean, he obviously has a background as a gymnast or a dancer or something. Yeah, the body control is
circus act.
Yeah, something. Yeah. And now he's just like creeping up a little at a time at the end. I love that.
From all the way at the bottom.
Yep. And then just one more foot. And it's so well done. And the precision of each jump landing, 6 inches higher. Isn't that great, you guys? Okay, let's go ahead and wrap it up then. What JVC, you think? Okay, guys.
Excellent. Thanks, Jeff, David, Calvin, everybody, Robert. Awesome to see all of you here on Saturday.
Yep.
Enjoy the rest of your day. Have a good one.
Tomorrow, Sunday reopen.
Yep.
Should be fun.
Reopen time. Cool.
Yep.
All right, gang. Catch you later. Bye.